Back on Economic Buzz, this program can also be seen through StarHub Asia Channel 121 Singapore with Buzz Sutami Harjan, Mr. Vicky Amarnani, market strategist, Monex invest in the futures. Now continue about Fiscal Cliff and then the risk and the strategy. Could you please continue about the Fiscal Cliff,
Yep.
Mr. Vicky?
Yep, I mean, it's a very prime focus, the whole focus on the Fiscal Cliff, because if they don't find a solution for the Fiscal Cliff, there'll be spending cuts and tax increase of $600 billion. And we have to understand the effect of that. If actually people have to pay higher taxes and the spending cuts reduce from the government, I mean, there's less money to stimulate the economy. What happens is that unemployment rate could rise.
Okay.
They're saying back to 9 to 10%. And if unemployment rate rises, then people don't have the spending power. People spend less, GDP grows slower, companies stop posting as good earnings, earnings start deteriorating, equity start dropping, the whole consumer confidence starts dropping. There's a whole domino effect into the other economies. Yeah.
So what's what the investors should do according to the situation? Wait and see, or just save their...
No, definitely not wait and see. In fact, even for my own investments, I'm watching until even Christmas. If till mid-Christmas or till towards the end of the year, no solution is found for the Fiscal Cliff, make sure you reduce your exposure. I'm not saying to sell off everything, but you reduce your exposure, because the risk to reward doesn't make sense now. Because if they find a solution for the Fiscal Cliff, there could be a mild rally, but if they don't find a solution, the fall can be much larger. So if you're booking profits on equities, on commodities, on other kind of investments, book some profit. It's always good to take some money off the table.
Okay, so according to this Fiscal Cliff, would affect Indonesia directly or maybe only for the investors?
Yes, of course, because what happens is that if there is a panic in the market, the dollar strengthens. A lot of people ask me why the dollar strengthens when the problem is in the Fiscal Cliff. The dollar is the primary currency. International gold is quoted in dollars. Oil international price in US dollars. I mean, not sterling or other currencies which are stronger. It's all US dollars. So even Indonesia's foreign currency reserves of the whole world, central banks, everything's kept in US dollars. So when there's a panic, everybody runs for the US dollar. So we have to be a little cautious on that. And then the rupiah can weaken further. But I do not see rupiah weakening above the 10,000 mark in any dramatic scene.
Okay, so your suggestion to investors on gold, oil, or maybe Forex or dollar?
My suggestion would be you should diversify yourself. Don't lay all your eggs in one basket.
Yes.
Yes, but for gold, we have to remember that gold is quoted against the US dollar. So when the US dollar strengthens, the gold actually weakens. So it is essential that when there's a panic, immediately the first immediate effect you will see is that there's a drop in gold prices. In fact, euro and gold go in the same direction. So when there's a dollar strength, euro tends to drop, gold tends to drop. But it is interesting that at a certain point, the gold level starts to pick up. So when from medium-term investment, don't buy gold at a high level, unless you're trading them on a short-term breakout basis. When there's a good correction, you can look to pick up the gold.
So how's the record during 2012 about the gold and maybe the foreign exchange of investors' interest?
You mean the movement?
Yeah,
of
the
gold?
movement.
It's been well. The first half was fairly volatile. It went up to 1.8. It dropped back down to the 1.5 levels. But if I see overall from mid-June to this year, it's been pretty nice range of about 1.640 to 1.800. So it's been a good range. But if you ask me my range for gold, I mean, let's say we do see a lot of big surprises, a lot of shocks. I don't see gold going below 1.550. And the top range I would say on gold is 2,000. So the range would be 1,550 to 2,000. But for more medium-term and short-term investors, the range would be 1,640 to 1,800. Break below 1,640, go ahead and sell. Break above 1,800, go and buy. Meanwhile, enjoy the range.
But still don't buy gold on the high level, right?
Yeah, I'm not too comfortable. I mean, because we've seen decent corrections, shocks in the market. So don't buy them right at the top, unless you're buying them on breakouts and looking for quick profits and coming out of the market.
Okay, talking about the internal condition now, economic policies Indonesia need to maybe prevent the economic slowing down and resilience. So for the long term, particularly in securing its commodity selling point, what's the best policy for government?
Well, maybe I would try to cover it from a general point of view. Basically, if you see Indonesia, first of all, it's got an investment grade rating from 2011 by Fitch and Moody's. That's a good positive thing, because a lot of hedge fund institutions can only invest in Indonesia if they're investment grade, or countries basically. So Indonesia's got that rating. And second thing is that Indonesia has progressively cut its interest rates. I mean, a few years back, interest rates was double digits, but like now with a rate of 5.75%, it's a healthy interest rate for people to borrow money and continue to do business. The burden is not as heavy, so lower interest rates. Healthy unemployment rate at the 6% mark. Good reserves, over 110 billion reserves by Indonesia. The reserves have been growing well. Good GDP growth, and the other positive thing about Indonesia is there's been good urbanization. So the inequality of income has been reducing. The middle class is making more money, and they're investing more into gold as well. So that's also a positive for commodities.
So in Indonesia, domestic markets, domestic consumption is still good.
Still good, because domestic consumption is 60% of GDP. The reliance on exports is about 26%. Imports are still within control. So overall, if I compare Indonesia to other neighboring countries, I mean, it is the largest Southeast Asian country also. But besides that, it's got a good diversification. Basically, it's not dependent upon just one source of income.
Okay, you mentioned about the middle class society is now increasing in Indonesia, and they start to collect gold, I mean, as their investment. What's your prediction? In 2013 will be increasing,
Yes, I will be increasing. That's why it's interesting to see that actually jewelry demand has been reducing, particularly, especially in India and China. Maybe in India because the currency has been depreciating, so people have to pay more Indian rupees to buy gold. So that becomes, it becomes more expensive for them. In Indonesia, gold price has been rising, despite maybe the international gold price has been reducing because the rupiah has been weakening. Rupiah last year in August has been weakening from 8,600 progressively now in the 9,600 range. So that's been a negative for gold because the currency weakening means they have to pay more for gold. But overall, as I said, the whole world is collecting gold, and the most positive point for gold price is central banks. Central banks want to secure themselves. The trust for currencies is decreasing day by day, so their investments into gold is increasing day by day.
Day by day, okay. So while everyone is collecting gold all around the world, so it's weakening, I mean, slowing down the price. How is it their prediction in 2013? We should buy on what range?
Well, for me, at this range of 1,700 is very attractive. The fact that gold has moved up only about 6% this year, it is an excellent price to be buying gold. We haven't seen that dramatic move with the QE3 taking place, with US interest rates to remain low until 2015. First they said 2013, 2014, now 2015. When interest rates are low, people are more willing to buy gold. Why? Because if I buy gold, I don't get any interest. But if I keep US dollar, let's say if I had $1 million and I'd keep it on interest rates, I would get 0.25% in the US, cut tax, I would get 0.1% per year. I would not want to invest in that. I'd rather invest in gold where an average of 10 years it moves 20% per year.
Okay, for investors, let's buy gold now. We'll continue after this one. Make sure you are still with us on Economic Buzz. After this, we are going to talk more about business review and the outlook for gold and oil commodity. Stay tuned on eBuzz.